Welcome to Looking at the Markets with David Modell. Let's talk about today's topic, which is so you want to invest in foreign countries. Talking about international exposure outside of the United States, which is where I am and where probably many of you are in the United States, and maybe you're interested in investing in other nations. So let's talk about that. Investing in foreign countries might seem exciting, but if you don't know what you're doing, it can be disastrous for your portfolio. Before dipping into foreign markets, you need to check the volume of whatever financial instrument you're using. If it's thinly traded, I would avoid it. You'll also need to have a thorough understanding of the country's history, government, political system, economic system, current events, international relations, and monetary policy. It also helps if you're conversant with the country's culture. And I also want to add that, if you've actually been to the country, um, and if you're familiar with that nation and just how it works and the spirit of the culture, that really helps. Otherwise, you're working off of secondhand knowledge, which is not what I recommend. So, one way to invest in foreign countries is through ETFs, or exchange traded funds. While you would have profited if you had bought and held the American S&P 500 for the past 5 years, the S&P 500 ETF 5-year chart is shown below right here. Not every region of the world would have performed well for you if you had bought and held for 5 years. All right, so if you had bought SPY for 5 years, you would have profited quite handsomely. So let's see how a buy and hold strategy would have done over the past 5 years for other, and this is just, this is not every country, of course, this is just a sampling. We'll start with EWG, and that's the Germany ETF. And first we're going to check the volume, about pretty close to 1/3 of a million shares traded today. Not too bad. I prefer to trade ETFs and stocks that are in the millions, or better yet, tens of millions or even hundreds of millions. But at least this is respectable. But if you look at the performance over the past 5 years, if you had bought and held it, you would have been down a little bit, about 5%. Next, we'll take a look at EZA, the South Africa ETF. Volumes probably not as high as I would like it to be, about 81,000 today so far. And if you had bought and held this for 5 years, you would have lost a little bit over 20%. According to this chart, it's down 22.36% over the past 5 years. Not the kind of performance that I'm looking for. This is FXI, the China ETF. The volume is good, almost 3 million shares traded so far, but the performance is not what I'm particularly looking for. Over the past 5 years, if you had bought and held, you would have lost about 15% of your investment. And particularly in the last the last year or so, the performance has been, I would say, substandard. EPI is the India ETF, and when I say the India ETF, it's not the only one, but it's one of the more popular ones in terms of volume, and it has about 500,000 shares traded today so far, and over the past 5 years, it has lost a little bit over 10% in price value. To be more precise, 11.71%, according to this chart, has been lost over the last 5 years. And we're going to look at RSX, The Russia ETF, again, not the only Russia ETF, but one of the more popular ones, at least in terms of volume. And it has not quite 800,000 shares traded so far today. It's respectable. And the performance, however, is not what I would be looking for. If you had bought and held this ETF over the past 5 years, well, you can see where the trend is. It's down. It's lost 53.34%. According to this chart, that's more than half of its value. Not too good. So here's the takeaway. My advice is straightforward. Stick to what you know. For safe, consistent income, only invest in stocks and ETFs that you fully understand and believe in. So hopefully that answers your question about international exposure. I'm not saying don't invest in foreign or international ETFs and stocks. I'm saying that if you think you're going to beat the performance of the S&P 500, well, this may not be the way to go if you don't really understand what you're doing. The results can be less than what you're looking for, to say the least. And if you'd like more help with this, or with stocks, options, ETFs, and investing in general, please feel free to contact me at any time. My email address is davidmodell@gmail.com. Thanks a lot.